This is Rush to Reason on KLZ 560.
Watching the NFL.
All right, what are you watching there, Dan? NFL?
No, nothing.
You're not? You're watching the NFL? You're watching it on your screen there, are you? Is it?
No,
That's not Thursday Night Football yet, is it?
No, there's nothing there.
You sure?
Yeah.
Should we look at the browser history and see?
No.
All right, Kurt Rogers joining us now, Affordable Interest Mortgage. And by the way, if you got a question for Kurt, feel free to join us. We'll have him for about a half an hour here, so feel free to join in, ask any questions that you've got. 303-477-5600. By the way, I got a text message in from Larry at Larry's Automotive, Dan, that says, yeah, there's a lower cheating chance on Go Fish.
Lower cheating chance on Go Fish. Oh, yeah.
Versus Monopoly.
Yeah, exactly. No question about it.
So less cheating in Go Fish.
Less cheating in Go Fish.
Versus Monopoly. So you can cheat in Monopoly.
And why is it that people keep making up the rules as you go along in Monopoly? All the time.
There's only one set of rules.
It's in the book.
That's right. The original set of Monopoly rules that you play by. If you land on my hotel, you're going to pay up. Or are
you going to lose? I'm going to liquidate you.
I'll bankrupt you and I'll just take all your cash.
That's right.
Now, that kind of goes along with what we're going to talk to Kurt about a little bit. Because if you've had a bankruptcy and somebody took all that cash, how soon can you actually reapply for a mortgage?
2 years.
2 years.
Have to wait 2 years.
So bad.
And not have any problems with your credit in that 2 years.
It's actually better than playing Monopoly with John.
Yeah, because once you get wiped out with John Monopoly, you're wiped out for life.
Yeah, you're done.
You're done.
You're finished.
That's
Till that game's over, you're done.
But, Kurt, there are other avenues if you want to find a place to live if you've had a bankruptcy.
Yeah, you can do a lease option, but you still got to wait the 2 years.
Right. But I'm saying it's not like you have to be in an apartment.
No, you don't. There's a lot of people that will have had a bankruptcy, but they'll go either live with a family member or they'll go rent a place and stay in that, and with the option to buy that. Because if you do that, then your 2 years of making those payments count towards good credit.
Yeah, because you and we've looked at the option to buy things.
Yep.
And so you can get into one of those. You don't have to be 2 years out of a bankruptcy to do something like that.
There's actually a lending institution out now that what they do is they will, if you go out and find a house, let's say you find a house for $350,000, and they decide to put you into it, you can buy it or rent it from them with a guaranteed option to purchase for 5 years with no money down. So what happens is they just go out and buy the home for you and put you in and put you on a 5-year contract. And at any time, you can buy it out as soon as you're ready.
So, and there is really no time frame with that, is there? I mean, you don't have to wait 5 years or 2 years.
You can do it in 1 year. The only thing they do is at the end of every year, they'll raise the purchase price by 5%. But that's the market's appreciating at that anyhow, so you're not. It's actually appreciating more, so you're not losing out.
Anything really.
And I believe
you're moving into a house that you're going to own. So when you're coming into a new neighborhood or into a new town, it's a great way to say, okay, I can rent here for a year or two. It's a house I like. I get to buy it. I get to absorb the appreciation in it. If I decide I don't want it, it didn't cost me anything.
Where do you find those deals?
So Denver housing just went up by 7% so far this year.
Okay.
Again, right? That's the latest numbers.
Yes.
And so, and they're capped at 5%. So you would have made 2% in that, even though you're renting.
Got it. Where do you find them?
It's a specific lender.
It's a lender that Kurt works with. So you go find the
of course,
property.
I wouldn't have mentioned it.
Exactly. So you go find the property. So it's not like a special property. You find the property, and if you've pre-qualified, they buy the house for you. You rent it from them.
Yeah, they go out and they negotiate, and they buy it, and you're just making lease payments to them.
That's a pretty good deal.
And it's not technically a lease option purchase. They just give you the right. And what happens is the money that you've put down on the security deposit, as the value goes up, you're buying it at the future value. So you only have to put 2% down to buy a home. You've already done that. You've got the equity, and you're moving on.
What's your phone number?
720-895-0500.
Yeah, people should call on that.
It's actually a great program. If you can't decide if you want to own or not, it's a great way to rent a property and say, okay, if I like this within a year or 2 or 3, I'm going to buy it. If I don't like it, I just rented it. Hasn't hurt me. They pay for all the maintenance. They take care of the house. So you get to see as it goes along. And if your neighborhood goes up in value quite well, you say, wait a minute, I got to get in on this.
Makes sense to me.
Yeah.
Okay, good.
It's really a pretty good deal.
Okay, so you and Ann were talking even before we came on about certain things that you shouldn't do, even though it's Christmas time and there's a lot of things going on. If you're in the middle of either a refi or you're thinking about doing a refi or you're going to upgrade the home and do a new mortgage, there are certain things you want to avoid this time of the year. Mention some of those.
Don't go out and buy a new vehicle in the middle of financing a home. Don't go out and buy a motorhome or a boat.
By the way, a boat, 2 of the happiest days of a boat owner's life.
We all know her.
The day you bought it and the day you sold it. Just saying. Just real quick, had to throw that in.
I've done the same. Loved it the first day. Couldn't wait to say goodbay to it.
That's exactly right. 2 greatest days of a boat owner's life. Anyways,
That's right.
Don't buy a boat, don't buy a camper, don't buy a motorhome, don't buy a car.
And some of the other things pay attention to, stores will give you 10% off if you get a credit card.
Right.
Well, if you go out and acquire 5 or 6 credit cards, even though your credit's a 740, you're going to drive it down to a 700 because you've added credit card debt, which
so that
your
10%
risk is
discount
higher.
wasn't that great.
That 10% is actually going to cost you more in fees to get that loan because a 700 doesn't get the same rate as a 740.
Now, if you're somebody that's secure, you're set, you're doing what you need to do, you're in the house you want to be in for X amount of time, great. Who cares?
that's
Go
right.
get that credit card.
Right.
Who cares?
But-
Go get the 10% discount.
I had one guy, he had 27 credit cards. Every time he went in the store, they'd offer him one, he'd take it. It's amazing.
Sign me up.
Sign him up. And he couldn't understand why his score was a 650. He paid all of his bills, but he had so many brand new credit cards, it was affecting his score.
Because they were looking at the overall.
They're looking at the overall picture, not at just how you pay. That's only 34% of your score. How you manage your debt, how much new debt you have, is 32% of your score. Credit cards have a big impact on that. Too many, putting too much money on them. If you got a $5,000 limit and you put 3, or if you got a $500 limit, put $300, it's the same effect. Keep it at around 20 to 30% of what the limit is, your score will go up. Once you go higher than that, your score starts going down. The risk, it's all a risk factor.
For them, that's what they're looking at,
That's
right?
what the banks look at.
Okay, let's take a quick timeout. We'll get caught up on breaks. We'll come right back. Kurt Rogers with us, 303-477-5600. If you've got a specific question for Kurt, please let us know, 303-477-5600. Speaking of credit, we've got a company now that we work with that can help you manage that credit, things that Kurt was just talking about. And if you've got a bunch of blemishes and things like that and you really need somebody professional to help you through that, Professional Credit Restoration will do that for you. 303-232-0303. Find them at prcweb.us and tell them Rush to Reason sent you.
Your credit profile should not stop you from reaching your goals. Professional Credit Restoration carefully analyzes your credit history, searching for errors that may be lowering your credit score unnecessarily. Once they work to correct those errors, Professional Credit Restoration coaches you through the simple steps you can take to improve your credit for the future. On average, Professional Credit Restoration will help you reach your goals within 6 months. Call Professional Credit Restoration today at 303-232-0303.
All right, Extreme Auto Repair coming up next, and they do diesel repair when others don't, I should say. Other automotive repair shops do not, because not all do. They would love to help you with your diesel vehicle. Anything you need, again, bumper-to-bumper service, 303-841-1071. That's Extreme Auto Repair in the heart of Parker. Tell them Rush to Reason sent you.
At Extreme Auto Repair, Dennis Brewster and his team respect your wallet. Other shops, for example, will go ahead and say, replace your belts, only to let you know afterward that your transmission is shot. Oops, that was a waste of money. Every time you go to Extreme Auto Repair, even for something as simple as an oil change, Dennis and his team complete a comprehensive check at no extra charge. Dennis doesn't want to scare you. He simply understands that you can't make an informed decision unless you know the condition of your vehicle. Otherwise, you run the risk of spending money on the wrong repairs. The longer you wait, the more expensive those problems will become, so Dennis and his team respect your wallet by letting you know early. Extreme Auto Repair helps you prioritize which repairs need immediate attention so you save money in the long term. Take it from John Rush and all of us at KLZ. Head to Parker today for Extreme Auto Repair, where you decide how to spend your money.
Everybody get up.
Stay up to date with Rush to Reason after the show on Twitter at Rush to Reason and on Facebook.com/Rush to Reason.
Hey, Dan. Charlie's in there.
Hey. Oh, yeah.
Wiki inside the little booth there. He's like a DJ behind that booth, isn't he? Behind that glass.
It's pretty cool when Charlie spins all the way around.
Yep. All right. Kurt Rogers with us. Affordable Interest Mortgage, 720-895-0500 is Kurt's number. Anything you need mortgage-wise, he is the guy to call. Does all of my stuff and would highly highly recommend Kurt. So, Kurt, let's talk more about me, self-employed people, because they're not always the easiest to get approved for mortgages. And more people are becoming self-employed.
Yeah, you're right. A lot more people with the economy.
Getting 1099 contractors, things like that, which really, they're self-employed at that point.
Correct.
Right? If you get a 1099, everybody listening, by the way, if you have the opportunity and you got to go to set up a little business and somebody says, hey, we'll take you from being an employee to a contractor, and you may think, hey, that's great. I can have some write-offs and all that stuff. Great. And that's true. You can. The reality is, though, it's much harder to get a mortgage at that point.
Very much so. It's easier to go from 1099 to W-2. You can get a loan quicker than going from W-2 to 1099. The banks just look at, again, it's about risk, so they want more history. They want more guarantees.
Because that's the part I still haven't understood. They look at being self-employed as a bigger risk than somebody that has a job that could get canned of tomorrow?
Correct, because over 80% of the people that start a new business are out of business within 2 years.
Okay.
So they're seeing the risks down the road. So they say, we don't want to play. Now, once you've had a self-employed job for 2 years, 1099, then they're going to say, okay, they've got past the toughest portion of it.
Okay.
And even with the new tax laws.
Even guys like me that have done it for 30 years, it's still not easy, though.
Well, no, it's not easier. It's easier, but it's not easy. I know that.
I mean, I'm 30 years in it. I mean, I've never worked for anybody else in 30 years, and they still look at you like, oh, can you make the payments?
Yeah.
I just don't know if you'll make them, Rush. I just don't know.
I know. It's 30 years. I mean, you've done this 30 years. I don't know if you can do another, 31. I just don't know if that's going to happen.
And they actually, they actually, underwriters will ask me, what's the guarantee they're going to still be doing it? Well, they are not practicing anymore. They've been doing it for 30. It's probably something they're going to do again until they retire.
Right.
And they happen to have, 7, 8 digits in assets in the bank. So, but they don't look at it that way.
No,
Seems risky to me, Rush.
They do not look at things like you would. And again, they don't look at things like you would normally look at an individual. And in turn, you got to have somebody, as far as I'm concerned, driving that mortgage, and let's just say what it is. So your broker really needs to be the guy driving that self-employment application, because otherwise you're liable to steer over into the curb and have a wreck.
Yeah, there's so many things you can do up front. Once you get those set into motion, then the rest of it falls into place, and it's really pretty basic stuff. Whether you have a business checking account or a personal checking account, they're actually starting to look at those. Now, they're not inflating them like they did back in 06 and 07. It's not breathe on a mirror and you get a loan or tell me what you make. You actually have to prove it. But if you're able to prove by your deposits enough money to justify the payment, you can get the loan.
So if you're a business out there that, you claim, hey, I've got 500 grand, just use a round number. I got 500 grand of revenue coming in. As long as you can prove that, yeah, in fact, I do have 500 grand of revenue coming in. Yes, I've got expenses and so on. And everything adds up. Then you're going
to get a loan.
You should be okay.
Yes.
Providing there's some profit there, I should
Correct.
say. I mean,
Yes.
if you lose money several years in a row, that's a problem too.
I've actually got some lenders that don't even look at your tax returns, so they'll never see it.
They're just looking at the income.
They're looking at what your income is that you're consistently proving for the last 2 years. Now, you may have 1 month that you make $3,000, and then the next 6 months you make 10. They're going to average them out. They understand that in business.
Okay.
So they're looking at what your average is over a 2-year period.
To me, that seems to make the most sense.
Well, it's kind of rare in the mortgage business. Common sense is not very common.
Yeah, I know it is. It's not real common. There's not a lot of common sense when it comes to banking. No offense, bankers, but there's just not.
And in defense of the underwriters and the lenders, they would like to be able to do more, but the regulations prevent them. There's a law that came out a couple of years ago called TRID that says it's called the ability to repay, which means you have to be able to prove you can repay that loan. Otherwise, you can't sell that loan to Fannie or Freddie and have it guaranteed by the government, which means it now has to be a portfolio loan, which means that lender has to loan their money. Lenders don't like loaning their money. They'd rather keep it.
Okay, whoa, time out. If they're a lender, what are they lending then?
They're lending the money, then
money?
They turn around and sell it to a servicer and they get their money back.
So they're really not loaning any money.
They're loaning somebody else's money, not theirs.
That sounds like a pretty good racket.
It is a pretty good racket. Then they get a piece of that pie as it goes along. But that's how they're designed.
How do I start this? I mean, really, sounds like a decent racket to me.
It can, unless the market crashes like it did in 07.
That's a little tough.
Then it becomes tough.
Okay.
I mean, the money loaning business has always been very profitable for the people that are in it.
Yeah, all the way back to biblical times, right? Go all the way back, right? It's that old golden rule, the guy with the gold rules, right?
That's a fact.
And it really hasn't changed a whole lot since then.
Okay, so They're in the lending business, but they typically sell the mortgage, which means they want to make sure that you're a good risk so they can sell the mortgage, because otherwise they got to put their own money into it, which they don't like doing.
And the laws there say they have to reserve 5 to 10% of what they're loaning out. So if they loan out $1 million, that means they have to have $100,000 that they can't touch,
They have to be sitting on.
that they have to sit on. That's called a portfolio loan. Those are some of the regulations. So in order to qualify, you have to have the ability to repay. You have to be, your debt ratios have to be X.
Okay.
You can't be too high. So that controls most of what the lending is. So the underwriters have to meet those guidelines to make that loan sellable to Fannie or Freddie. And that's why they have these, because the Dodd-Frank bill wrote these laws. CFPB.
Never liked the name Fannie and Freddie, by the way, just saying.
Front or back, right?
For some reason, it reminds me of candy. I don't know why.
Fannie, Freddie, I don't know. Well, it reminds me of Al Franken. I don't know why. It just kind of does. I don't know why. Just saying. Okay, Kurt Rogers with us, Affordable Interest Mortgage. Again, 303-477-5600 is our phone number. His number, if you want to call him directly. And by the way, Kurt will meet you anywhere you want to meet. You don't have to go to his office to talk about mortgages. He'll really do it anywhere you want to. 720-895-0500 is his phone number. So, how hard is it to get somebody self-employed approved?
I'm running at about probably a 65-70% of those that apply that I'm able to get
It's
done.
not bad.
It's really not. What will happen is sometimes a lot of self-employed people might start this bank account and stop this one and go to that one. I have to have 2 years continuous in the same type of account. They got to see some kind of stability. The old saying, if you want to borrow money, you got to have ability, stability. Ability to pay, stability that you've proved. Those are some of the things that they look for.
Okay. Still a good time to either refi, or if you're thinking about changing neighborhoods, things like that, still a good time to do all that?
See, I actually think right now is a great time to refi, and especially what you can do with your current home and upgrade it. If you do the right upgrades, you're going to get 60 to 70 cents on the dollar for every upgrade you do. So you're raising the value of your home, and it's already got plenty of equity.
And you're living in it to boot.
Yeah, because you can't go out and get money at 4%. You can still in a mortgage, but you can't go out somewhere else and get it at 4% unless it's a HELOC, and then that's going to continually change. But when the HELOC rates change, that doesn't mean the fixed rates change, because our rates are still pretty good.
So even if you got a HELOC right now, you probably would be better off. Not probably. You would be better off to go ahead and get that refied, wrap it all into one mortgage, and get rid of the HELOC.
Yeah, because let's say you're running. There are HELOCs out there at 3.99 that people got 6 months ago.
Mm-hmm.
But a HELOC rate now can be anywhere from 4.75 to 6%.
Okay.
Well, that's going to go up probably 2 or 3 times next year. Well, that fixed rate's not.
Good point.
So, and when you're paying a HELOC, you're normally just paying the interest only, not paying any principal. If you decide to pay principal, you're paying a whole lot more money.
True.
So you can improve the value.
HELOC has an end date too.
That's after 10 years, you've got to go to principal and interest or whatever the rates are at that point. So it becomes a lot riskier when you're looking at these home equity lines of credits to fix up your home instead of just refinance your home. You don't have to extend the term. Just take out the 50 to 70, 80,000 you need, fix it up, keep the same term. It's going to, in the long run, be cheaper, and you've improved the value a whole lot faster on guaranteed money.
All right. New homes where folks are thinking, hey, I thought about doing a new home, or it's in a neighborhood that I'd like, or it's all I can find because there's not a good lot of decent used homes left. I can get good value out of mine. I can shift gears, buy a new home. Do you need to use the mortgage lender that the builder is telling you have to use?
No. You are not required. Now, most builders will give...
Because they really incentivize you to do that, don't they?
Well, on paper, we talked about monopoly earlier, didn't we?
Mm-hmm.
Okay. On paper, they're incentivizing you. But what they're giving you is basically monopoly money, because all they've done is inflate the price. About 90% of the time when I have a customer that goes to a builder and says, well, they gave me $7,500, they gave me $10,000 to use their lender. Well, you're paying a higher rate. You're paying more for it, that I can give you a better rate and get you into the loan without that $10,000. So they're not giving you anything
There's
that
no
you've
free
not.
lunch.
It's not free. And the problem I've seen with a lot of builders, and I'm not trying to pick on them, they're not able to meet their dates. I have one customer that they told the people to move out in September or to sell their home. They sold it in October. They put them up in a hotel, and they still can't finish the house for another 60 days. Now, these folks are 70 years old.
Wow.
And they're saying, well, the contract says that we don't have to finish it at our time, and we're keeping your money. So it's all designed around them. They don't really care about you because they know from back in September when they started this house.
It's worth more today now anyway.
It's worth more now.
Really
they don't care.
If you go away.
They don't care.
Because they could resell it to the next guy walking in the door. They could care
Because
less.
there's somebody still out there doing that.
Okay.
So
here's a question for you, which we've got time before we go to break. Let's say you want to avoid that, and you've got good enough credit where you can just own the other home until the new home is finished. What's your thoughts there?
I actually have a customer that's doing that. They went out. They own their house free and clear. Now they went out and got the down payment money for the new house they're buying.
Okay.
They used to call them a bridge loan. Problem with a bridge loan, they don't always work. So they went out and got the money. They put it in the bank. They'll use that as a down payment. They'll still qualify for that house. Then they'll turn around, clean this one up, and sell it, and be in a much better position. And they control the entire environment.
Now, what if you have a mortgage on that house that's not free and clear like you just mentioned? What if you've got a mortgage on your current house and you don't want to wait and be in a hotel or living with mom and dad for 6 months while the new house gets done?
You can still do the same thing because you more than likely got enough equity to make it work. Because if you think about it, if you're selling your house, you got enough equity into that you're going to use for down payment. Just tap it for earlier because you can get loans up to 90% loan to value.
Okay. How do you qualify all of them when that's going on? Because you've got current mortgage, you're looking at new mortgage, new house. I'm assuming that part of the qualification is the old house has to go away.
In some cases,
how do you do all that?
Yeah, that then becomes the tough part. If you're living in, let's say, a $300,000 house and you're trying to buy a $500,000 house, now you got payments on an $800,000 house.
Right.
That could be difficult.
Yeah. So you have ways to work through all that?
Yes. If you're willing to not sell your house, take out the money for the down payment, not sell your house, turn it into a rental, you qualify.
Oh. Hadn't thought of that.
Yeah. Because the money coming in on the rental takes care of the payment, so it doesn't affect your debt-to-income ratio. You qualify for the other one. You rent it for a year, then turn around and sell it.
Yeah,
if
there's
you
a
want
couple
to.
of homes back in the day that I was looking at the other day on just property values. And had I kept a couple of homes that I really didn't take much equity out of, my very first home in Boulder, for example, I paid $86,000 for. Sold it 2 years later for $92,000. Thought I did pretty well, actually. And in that day and age, that wasn't too bad. So I went from $86,000 to $92,000. Made what?
10%.
10%.
Yeah.
And I didn't think that was too bad. Sold it myself. Didn't have a realtor, so I made the whole 10%. Unfortunately, though, if I would have kept that house, today it's worth about $500,000.
Yeah.
And it's a little shoebox. It's nothing. It's 1,100 square feet, and it's worth close to $500,000. So I should have kept it. It was close to the campus. I probably could have rented it this entire time.
Even if you
And
rented
that
it for
income
$300 or
even coming
$400
in.
a month, it would have made the payments.
I screwed
easily.
up. I messed up. I mean, I should have figured out a way to borrow the $5,000 or whatever I needed to go buy the other house. I could have begged, borrowed, stole, did whatever I needed to get that $5,000, and I should have kept the first one and rented it. It wasn't as easy to do back then.
Hindsight.
I got
By the way, that was when interest rates were 9%.
I got a comment on Facebook Live here real quick.
Let's hear
John
it.
Rush messed up. I got
Yes,
I got to
did.
type that in.
Oh, I did, big time. Oh, jeez. I have two of those I should have kept as rentals back in the day. You know, because back then, to Kurt's point, yeah, you had 10%, but it wasn't that much money. I mean, it was, I guess, and you had to have that money to go to the next house. But hindsight is, if you could have kept them and rented them, look how much further along you'd be today.
Yeah, so much
Huge.
Further.
And those houses would have cash flowed. You'd have made enough money on that back then where you'd have had the income this
Especially
whole
in
time.
Boulder near the campus.
The house would be paid for today worth $500,000.
Yeah, and that's what a lot of people don't think about when you get into the rental business. There's two reasons you buy it: to fix it and flip it, turn it, get your cash out of it quickly with more, or cash flow. And when you start looking at cash flow, all of a sudden that starts to be very creative. Especially they're paying as you get a higher value, so you're not just making money every month. You're making that 7% per year.
That's right, and the money every month.
Plus the money every month.
Yeah.
So you're making.
That's a good deal.
And you still get to write that off. The tax laws do not affect rental properties at all.
No, it's
so
a business.
you still get that write-off.
It's a business.
Yeah.
All right, we'll come right back. Kurt Rogers with us again, Affordable Interest Mortgage. His number directly, 720-895-0500. If you want some wealth insurance, things that we're even talking about right now. In fact, Andy Goss will tell you, take out as big a mortgage as you can and then put that money into another piece of property if you possibly can. That's where Kurt comes in handy as well. So usgoldcoins.com, 1-800-468-2646. Tell them Rush to Reason sent you.
Andy Goss from usgoldcoins.com wants you to consider giving gold and silver coins to your loved ones as gifts this year. Beautiful, authentic, and valuable gold and silver coins really are the perfect gift. It's like giving the people you care about the gift of financial security. Plus, as a KLZ listener, Andy will give you his 3 CDs, The Federal Reserve, The Definition of Money, and How to Protect Your Wealth, all for free. All you have to do is call 800-468-2646 and mention KLZ. These CDs give the gift of knowledge by teaching you and your loved ones everything you need to know about how to use gold and silver coins to protect your wealth in any situation and introduce them to the fun and lucrative world of collecting valuable coins. This offer also includes a free copy of the Guide to U.S. Coins, basically the Bible for coin collectors. With this valuable bundle, you can skip the long lines at the mall and help your loved ones start on their way to a secure future with wealth insurance in the form of beautiful, authentic, and very valuable U.S. coins. Call Andy Goss at 800-468-2646. That's 800-468-2646 for your gift bundle today.
Learn how to trade, invest, protect, and grow your money with Online Trading Academy's patented methods. Attend a free half-day class on investing for long-term wealth and short-term income. Call 303-217-4511. That's 303-217-4511 or visit tradingacademy.com.
It's time to leave your safe space. This is Rush to Reason on KLZ 560.
All right, Rush to Reason, Denver's Afternoon Rush, KLZ 560. Kurt Rogers, Affordable Interest Mortgage with us. We've got, 5-6 minutes left with Kurt being with us. If you got a question for him, please let us know, 303-477-5600. Okay, so Kurt, one thing, I just kind of nosing around this past weekend and noticed that there are certain areas in town where it looks like owning and renting out a condo is something that a lot of folks do. And I was doing some property search, long stories, looking for something else. But as I was scrolling through different, condo complexes, not apartment, but condo complexes, and I'm looking at, oh, wait a minute, this guy owns this one, and the one below, and the one above, and the one next door, and the one below that. I'm thinking, man, somebody's scoring on these, because what's happened is basically one guy just said, well, hey, this was a good investment. I'm going to buy. When the opportunity arises and the one above it becomes for sale, I'm going to buy it. And I'm going to manage. It's easy to manage because I'm already right there. It's all in the same area. How does that work? How do these people make that happen?
They're just paying attention to what's being sold. One of the problems that creates is if a real person wants to come in to buy one, they do a condo cert. And if not a certain percentage of are owner occupied, lenders won't loan money on them because the risk is higher. So, if you're getting up above 50% is rented, lenders won't touch it.
Really? And they can look at the property itself and determine if that's the case?
The HOA has to do what's called a condo cert. How many people are owner-occupied? How many are rented? Okay. And you take that by the percentages. So some of those times it doesn't hurt the investor because he doesn't care. He's just going to come in and he's going to buy it and he's going to rent it.
Because he's got cash anyways, who cares?
But it affects the people that live there as owner-occupied because now they can't sell it, which takes buyers out of the market.
I didn't know
because nobody can get it. The only people that can get it are investors, and they never want to pay retail.
I didn't know that. So some of these guys that are owning 3, 4, 5 at a unit or at a time are probably either an investor, somebody that figured out, listen, I can take X amount of my retirement and start dumping it into these types of properties and make my money back.
Correct.
Make better than I can in the stock market.
And I have one guy who owns 34 properties, and he's pretty close to doing that kind of stuff. That's what he does. And now that he has the cash flow, he just pays cash for it and rents it out. He doesn't care what the HOA cert.
So he's looking for those, actually.
He actually looks for those. It works for him. He now controls that apartment or that condo, and he can kind of control the rent.
So he can kind of control the complex in a way, too. Because now he has more votes for the HOA.
Correct.
It's a monopoly, Dan.
That's definitely monopoly.
That's monopoly right there. There's the rules right there.
Right.
It's no different.
How to work around them.
It's no different. It's no different.
That's right.
Okay, so there are people out there listening that have pretty good equity in their homes. They're thinking, what do I do? We hear Andy Goss come on all the time, talk about the equity in your house, take out a bigger loan, do something with that. These are the sorts of things you can do with that. Second home's not to vacation in, but to make money on.
Correct. Again, you're worried about when you're buying an investment property, one of two reasons. If I can buy it for $200 and I know, I'll spend $10,000, $12,000 paint it, little elbow grease, I can sell it for $280. Buy that rental and move on. Who cares how much you put down? You're going to turn to cash.
Got it.
Second one is a cash flowing for me. Am I paying, $800 a month in mortgage payment, but I'm renting it out for $1,400?
That's not bad. That's $600. Do that a few times over, and you got some income.
Yeah. Now all of a sudden you're taking enough cash. You pay one down. Now you got cash. You take that cash. Go do it again. It's a process. You're not going to get rich with rentals in 12 to 24 months. No, but if you develop a plan and you pay attention to what you're doing, that can develop. I got a guy making $150,000 a year, and that's all he does is rentals.
Really?
And he's only 38 years old.
Very doable.
It's very doable.
Okay, so you can walk somebody through all of that. And again, I'm guessing, and we talk about this a lot. You're mobile. You'll meet somebody anywhere they want to meet. You can sit down and just say, okay, let me see what you got. Give me all your stuff, and roundabout. Tell me where your address is. What do you owe on the home? Give me a little bit about what your debt is, and let's come up with a plan. You can help with that.
I can. And if somebody's actually thinking about getting into investments, one of the best ways to maybe start is go out and look at a duplex or fourplex that you can live in.
Okay.
You buy
They're
that
called
as
paired
a,
homes now, by the way.
That's
folks.
right.
Paired
Paired
homes.
homes.
Paired homes.
You can go out and buy that. Let's say that duplex, and let's say it's $600,000.
Okay.
Your side's $300,000.
Okay.
But it's one unit, so you get primary financing, not investment financing.
Which is cheaper.
Less money down, lower rates. Now you got a renter next to you, and after a year, you're saying, "Well, this works pretty good. I should go do this again."
Okay.
Then rent the other side. Now go buy another one, and then pick up the third rental. So within 2 years, you've got 3 to 4 rentals.
Not bad.
It's a good way to get started so you say, okay, I don't like this. I'm not going to do this anymore. Or I do like this, and I'll continue to do it. Duplexes are a great way to get started in the rental business if you decide you can live in one of them.
Okay. Makes total sense. Again, Kurt, you can find him 720-895-0500 website.
www.aimortgage.net.
Do we have time for one more quick question?
Yeah, and then we'll do the disclaimer. So go ahead.
Okay, one more quick question. Okay, this is texted in. Is there a mortgage for Is there a mortgage for family rentals? For example, the parents buy the home and their adult kids are the renters.
The parents would have to buy it as an investment property. Yes.
Okay.
They can't buy it. Now, what they could do for it is they could buy it as a non-occupying co-borrower, and the kids could be on title and own it. So it's not a rental unless the parents want to write it off as tax returns. But they could buy it, and the kids could own it and use that's what we talked about this earlier.
Yeah.
The parents could help them with the income to qualify for it. Now, if they can't qualify because of a bankruptcy, then they'd have to buy it as a rental.
Okay, makes sense. Okay, so you can help with that as well.
No
All
problem.
right, the disclaimers.
7400 East Arapahoe Road, Suite 109, Centennial, Colorado, regulated by the Division of Real Estate, NMLS 298191, and we are an equal credit lender.
And your phone number one more time.
720-895-0500.
Kurt, always a joy having you. Thanks for your time. We appreciate it very much. We'll let you get out of here, and I appreciate it. Let's do this. We've got Grandma's Handyman coming up next, so if you need anything done around the house, some fix-up work, things that Kurt even just mentioned a moment ago, call Grandma's Handyman, 303-693-3003. Find him at grandmashandyman.com and tell him Rush to Reason sent you.